Ladies and gentlemen, good day and welcome to the Rupa and Company Limited Q4 and FY26 earnings conference call hosted by MUFG in time. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Omkar Bagwe from MUFG. Thank you, and over to you, sir.
Thank you. Good evening, everyone. I welcome you all to the earnings conference call to discuss Q4 and FY26 results of Rupa and Company Limited. To discuss our results, we have with us from the management, Mr. Vikas Agarwal, the Whole-Time Director, and Mr. Sumit Khowala, the Chief Financial Officer. They will take you through the results, and then we will proceed to Q&A session. Before we proceed to the call, a small disclaimer. This conference may contain certain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations as on date of this call. The actual results may differ materially. These statements are not guarantee of future performance and involve risks and uncertainties that are difficult to predict. A detailed safe harbor statement is also given on the page 2 of company's investor presentation. Now, I would like to hand the call over to Mr. Vikas Agarwal. Thank you, and over to you, sir.
Thank you. Good evening, ladies and gentlemen. On behalf of Rupa and Company Limited, I extend a very warm welcome to all the participants joining us today for our Q4 and the financial year 26 results conference call. We appreciate your continued engagement, and finance results and investor presentations are uploaded in the stock exchange for review. Our company delivered a steady performance during the quarter amid a competitive business environment and evolving consumer demand trends across key categories. Revenue growth during the quarter was driven by healthy volume expansion across segments, while pricing conditions across the industry continued to remain competitive. Revenue for Q4 financial year 26 stood at INR 441.5 crores, registering a growth of 6.3% year-on-year. The company recorded a strong volume growth of 9% during the quarter, reflecting improved market traction, focusing execution and strengthening consumer demand across our product portfolio. Our continued emphasis on scale expansion, stronger channel engagement, and product mix improvement supported overall business performance. The leisure segment continued to witness encouraging momentum during the quarter, reaffirming strong consumer acceptance and the growing relevance of our diversified portfolio. We also continue to focus on strengthening our position across mid-premium and premium categories through focused product initiatives and calibrated channel expansion. Exports contributed 3% to overall revenues during financial year 26, while modern trade, including e-commerce, contributed 5% to revenues during the year, reflecting our measured and strategic channel expansion efforts in a competitive market environment. EBITDA for the quarter stood at 55 crores, with EBITDA margin at 12.5%, while the operating environment continued to witness elevated competitive intensity. We remain focused on disciplined cost management, operational efficiencies, and prudent inventory control measures to support profitability and long-term business sustainability. Operating cash flow for financial year 26 stood at 45 crores, demonstrating our continued focus on prudent cash management and working capital efficiency. As of March 31st, 2026, our cash surplus further improved to 33 crores, reflecting the strength of our balance sheet and healthy liquidity position. During the quarter, we continued to strengthen our sales and distribution network by making focused investment in our sales tree and improving our on-ground market execution. We are hopeful these initiatives will help us expand our presence across markets, increase the reach of our products, and improve the efficiency and productivity of our distribution channels. In addition, the company is increasingly emphasizing on improving secondary channel sales by increasing product movement from distributors to retailers. We are also maintaining optimum inventory levels across the channel to ensure better stock availability. We believe these initiatives, coupled with our continued focus on building a stronger sales infrastructure, will support future growth, enhance operational efficiencies, and drive sustainable profitability over the medium to long term. Our commitment towards delivering sustainable long-term value to all stakeholders remains strong. In line with this commitment, the board has proposed, subject to shareholders' approval, a dividend of INR 3 per equity share for financial year 26. We project revenue growth of 10 to 12% in financial year 27, largely led by volumes, and expect our EBITDA margin to be in the range of 9 to 10%. Backed by our established brands, extensive distribution network, and strong market positioning, we remain confident of navigating the evolving market environment while continuing to create sustainable long-term value for our stakeholders. With this, I would also like to hand over CFO Mr. Sumit Kawara to take you through the financial highlights of the quarter and the full year. Thank you.
Thank you, sir, and good evening to everyone. Thank you for joining us on the Quarter 4 and FY26 earnings call. I will now take you through the key financial highlights for the period. For Quarter 4 FY26, revenue from operations stood at 441.5 crore as compared to 415.5 crore in Quarter 4 FY25, registering a growth of 6.3% year-on-year basis. EBITDA for the quarter stood at 55 crore as compared to 45.9 crore in the same period last year, registering a growth of 19.8% year-on-year basis. EBITDA margin for the quarter stood at 12.5%, improved by 150 basis points year-on-year. Net profit after tax for the quarter stood at 36.1 crore as against 30.6 crore in Quarter 4 FY25, registering a growth of 18.1% year-on-year basis. PAT margin for the quarter stood at 8.2%, improving by 80 basis points year-on-year basis. Now moving to the full year performance, revenue from operations for FY26 stood at 1,259.1 crore as compared to 1,239.3 crore in FY25, registering a growth of 1.6% year-on-year. EBITDA for FY26 stood at 115.3 crore as compared to 130.4 crore in FY25, registering a degrowth of 11.6% year-on-year. EBITDA margin for FY26 stood at 9.2% as against 10.5% in FY25. Net profit after tax for FY26 stood at 72.5 crore as against 83.3 crore in FY25, registering a degrowth of 12.9% year-on-year. PAT margin for FY26 stood at 5.8% as compared to 6.7% in FY25. As on March 31st, 2026, the company remained in a net cash surplus position of INR 33 crores, reflecting our robust liquidity profile and strong balance sheet position. We remain committed towards improving profitability through better product mix, efficient channel management, focused investment in high growth categories, and disciplined cost optimization initiatives. With this, I conclude my remarks and open the floor for question and answer session. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to please use handsets while asking a question. Ladies and gentlemen, we will now wait for a moment while the question queue assembles. Our first question comes from the line of Preeti Agarwal from SK Associates. Please go ahead.
Thank you so much for the opportunity. I wanted to know what is your capex plan for FY27?
During FY27, the company will strengthen in-house capacity by developing manufacturing from warehousing facilities. And there will be total outlay of 60 crores, which will be spent in 2 years' time. And this capex will be developed at West Bengal Hosiery Park, Kolkata.
Understood. And what is your advertisement expense for the quarter, and can you please throw some light on the next year guidance?
The advertisement spends for the quarter is around 4%, and the next year guidance would be the advertisement will be expenses would be in the range of 6 to 7% for FY27.
Understood, sir. Thank you so much. That's it from my side.
Thank you. Our next question is from the line of Yash Mehta with SKP Capital. Please go ahead.
Okay, yeah. Thank you for the opportunity. So I wanted to ask, like, is there an impact of USA-Iran war amid Middle East disruptions?
There is no potential impact on the business, but business is facing some challenges such as increase in price of crude would lead to the rise in the prices of raw material. Secondly, there is a global disruption in shipping routes, so logistic and freight costs are higher, and there is a foreign exchange volatility. These are the challenges faced by the company amid this US-Iran war.
Okay, got it. Thank you so much.
Thank you. Our next question comes from the line of Ruddhi Vora with SAS Capital. Please go ahead.
Hello, am I audible?
You are audible, ma'am.
Yeah, so my question is that industry is facing intense price competition. So have you taken any price hike in the last quarter and any plans for price hike in the coming quarters?
Yes, we have taken a price hike of around 4 to 5% in April, and we might take another price hike into maybe 2-3% in June, July, depending on the market condition.
Okay. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Sajal Trivedi with MSC Capital. Please go ahead.
Hi, sir. Good evening. I wanted to ask, you have given the guidance of revenue growth of 10 to 12%. So what will be the split in terms of volume and value?
Volume should be maybe 4-5%, and largely it will be value, a mix of both, 4-5% each.
Also, what is the main reason for increase in EBITDA in quarter 4 FY 2026?
The main reason for increase in EBITDA in quarter 4 is because of increasing gross margin, and this is mainly because of change in product mix. Athleisure grows well in quarter 4 FY26.
Okay, thank you very much, sir.
Thank you. The next question comes from the line of Nidhi Sharma with AP Capital. Please go ahead.
Hi, good evening.
Good evening.
Hello.
Yes, ma'am. Good evening.
Yeah. So thank you for the opportunity. I wanted to ask that can you give us the split of inventory into raw materials, finished goods, and work in progress?
The split of inventory, the raw material is around 13%, the finished goods is around 54%, and work in progress is around 33%.
Okay. Thank you so much.
Thank you. The next question comes from the line of Shubhankar Gupta with Equity Capital. Please go ahead.
Hi, sir. I think 2-3 questions on my end. First is that in the PPT also you mentioned that we have strengthened our sales and distribution capabilities with focused investment in sales team and field execution, right? Just want to understand if you could throw some light on how we have strengthened our sales and distribution capabilities.
So in terms of sales heads, which we are trying from last couple of years, but we are quite confident now in terms of the capacity, in terms of the talent we have appointed recently. So one is the sales head, all India, along with the sales and distribution strategy head, and EBO head also, which will be focusing on EBO, and a separate head for e-commerce, along with 4 zonal heads also, which are already appointed and already working in the company from within a month's time. So the team is in place now, and we are sure in coming months we will see the impact of same.
So all of this has happened in the last 1 quarter, in the last Q quarter?
Yeah.
Okay, got it. And sir, just one, I think 1-2 bookkeeping questions. So when we are standing at good cash in the books, which is a good thing, right? What was the need to increase short-term debt?
There is a arbitrage. What we do is basically we invest in a fixed deposit at a higher rate than our borrowing rate. So net you will find there is no finance cost.
Okay. Okay. And so with regards to sales growth for FY27, what is our expectation, and what will be the key levers which will lead to that growth?
So as you said, we are targeting a growth of 10 to 12%, and key levers is like, of course, we need to grow across GT, across modern trade and all, and we have team in place, strong team in place, and we'll be focusing more on secondary and instead of primary. So mix of, and as well as we are focusing on export as well. So mix of all these factors should help us to achieve the target.
But sir, so this is like across the board, right? But let's say any specific space in which will be focusing more?
So we need to focus everywhere. We need to have a strong focus everywhere. So it's not like we'll be focusing just on GT. We need an equal focus on modern trade, on export, everywhere. So in terms of focusing, we need a strong team, and we have the team in place, and we are lacking a lot of GT, lot of areas in e-commerce as well. So all the channels should contribute to our growth.
Okay, sir. And in terms of the 70 crores which we spent on brand and development costs for FY26, could you just help throw some more light on the details of how the 70 crores is actually spent?
So we'll share the breakup, but we are gradually focusing more on digital and online medium and all. But one second, breakup. The outdoor, 50% of the total expenditure, and digital digital is around 4%, and television 10 to 12%, and print media is also 12%.
Sorry, so it's basically outdoor is 50, digital is 4, television 10, 12, and print media 12, right? So total is around 30. So 20% is still left, right?
Yeah,
this total is 80.
Full details right now we will share separately. But the idea is going forward is increasing more on the digital platform.
And so within digital, any specific platform or medium?
Across all the platforms. Marketplaces.
Okay, sure. Thank you. All right. Thank you.
Thank you. Ladies and gentlemen, to ask a question, you may please press star and 1. Our next question is from the line of Darshan Shah with MNS. Please go ahead. Darshan Shah, your line has been unmuted. You may proceed.
Yeah, am I audible?
Yes, you are.
Yeah. Thank you for the opportunity and congrats on a decent set of numbers. My first question was, what drove the sharp rebound in gross margins in Q4 despite the competition and the geopolitical tensions that we know is going around?
Yes.
So my question is, what drew the sharp rebound in gross margins in Q4? Was the expansion in gross margins the reasons for that?
The main reason is that athleisure contributes well in this quarter 4. There is a volume growth of 20% in quarter 4, and value growth is 25% for athleisure. So this is the main trigger point for improvement in gross margin. And the increase in overall revenue as well, which will compensate with the operational cost.
Got it, sir. And sir, do you think that this gross margins of about 28% will sustain going forward, or will revert more towards the 26-27% range?
Yeah, with this initial price hike and acceptability in the market, we hope that we will sustain this gross margin.
Okay, got it, sir. My next question was, what are the specific triggers, either cotton yarn pricing, competition, discipline, demand recovery? What will drive this pricing normalization over the next 1 to 2 quarters?
So it will all depend upon the competition in the market dynamics. It's very difficult to say, but yes, as long as the demand is there, there's a shortage of yarn and all. So like every day is a new day. We have to see how it goes forward.
Okay, sir. And sir, specifically on the discounting front, are we doing some dynamic discounting or any such things right now? Or are we just enjoying the higher prices right now, and then depending on how to stimulate demand in the future, we will look at how to play with discounts?
the discount is totally, the market is totally buyer's market. So it totally depends on how market behaves. Means we have to we have to give discounts in line with the market.
Okay, got it, sir.
We have taken a price hike and the prices are, the trend so far looks strong. So it all depends upon the yarn prices, the cotton prices going forward.
Okay, got it, sir. I'll join back in the queue for any further questions. Thank you.
Sure. Thank you.
Thank you. Our next question comes from the line of Rajiv Jain with Arcane Investment. Please go ahead.
Hello. Thank you for the opportunity. So I just have a couple of questions. So starting with, while our volume growth has accelerated to 9% in Q4, revenue growth is still modest. How much of pricing pressure still persists when we look at over Q3 levels?
Pricing means in Q3 there was also a volume growth and there was an intense pricing competition. The same we have faced in Q4 also. So means amid this intense pricing competition, we have to maintain the price in line with the market.
Understood, sir. Understood. And furthermore, has the 12% trade discounting intensity reduced meaningfully in Q4 or still it's elevated?
It's around 12%.
It's around 12%. Understood. And sir, in Q4, margins have rebounded strongly to almost 12.5%. How much of this is sustainable? Was a seasonal one? What do you think?
With this initial price hike, we hope that the gross margin would be at the same level going forward.
Understood. Understood. And is the pricing pressure now structurally behind, or could discount remain elevated going forward as well?
We will maintain the same level of discount.
Understood. Understood. Thank you for answering my question. That was all from my side. All the best for the future quarters.
Thank you. Participants who wish to ask questions may please press star and 1 on your touchtone telephones. Our next question comes from the line of Vinay Kumar, an individual investor. Please go ahead.
Yeah, my question is regarding a bit long term. As I'm going through your last 5 to 10 year data, we have seen the CAGR sales growth of near 2% and the profitability is also around 2 to 3%. So what kind of a 3 to 5 year roadmap you are seeing the sales trajectory and the profitability? And the second part question is also that since we do 5 to 7%, 6 to 7% expenses on advertisement in brand building, yet the OPM margins are like a normal business, 9%, 10%, 12%. So why the industry as an industry, you're not able to capture the brand value in the margins actually? Where is the brand value actually? My question is, second part is more important. Yeah.
So it's a very competitive, hosiery industry is very competitive from last couple of years. So your query is genuine. We are also working on same. But as we, Rupa and Company as individuals, we are focusing more on secondaries now, focusing more on retail. For that, we have built up a strong retail team. We will be focusing on secondaries and on developing the retail network. So we target a growth of 10 to 12% for next couple of years. And with that, every year maybe profitability should help us to increase the profitability by 50 basis points year on year.
Okay, thank you. Thank you.
Thank you. We have no further questions, ladies and gentlemen. I would now like to hand the conference over to Mr. Omkar Bagwe for closing comments. Over to you, sir.
Thank you everyone for joining us on call today. I would also like to thank the management for sparing the time and answering all the queries. We are MUFG in time, Investor Relation Advisors to Rupa and Company Limited. Thank you and over to you, sir.
Thank you so much.
Thank you, sir.
Thank you for all your support.
Please go ahead, sir. Thank you. On behalf of Rupa and Company Limited, that concludes this conference. Thank you all for joining us. You may now disconnect your lines.